You look at the story and you can just see the writing on the wall, but the media doesn't want to cover just how bad things actually are out in the economy, right? Well, I tell you what, um, anytime my wife pulls out her credit card and makes a big purchase, I always say, "Man, I hope that thing doesn't catch on fire." But I think a lot of people's credit cards are catching on fire lately, as credit card debt is surging. The average American owes at least $6,000, maybe even more. Consumers owe a collective $1.02 trillion in credit card debt. That's outrageous how much that is, right? Americans are racking up more credit card debt as they continue to battle high inflation and interest rates. I'm doing some consulting with a financial institution in a couple of days, and this is one of the topics that I want to talk about here. How Americans are so strapped they can't afford their normal day-to-day lives, and so they've been putting it on the credit card. At some point, the credit cards are going to max out, and especially when you consider that the credit cards are 20, 25, 30+% interest rates, people are going to hit a brick wall in a very ugly way very, very soon once those credit cards hit their limits. And when they do, they can no longer keep up with their lifestyle. They definitely don't have any money in the savings accounts. And people are going to just say, okay, that's it. I can't afford it anymore. I'm cutting it off. And when we do, I think that could be the final straw that breaks the economy's back, right? We're struggling. We've been struggling for ages in the economy. But those in charge want to tell you that when people are racking up credit card debt, that means the consumers are healthy and strong and they're excited to go spend money. But we know the case, right? When groceries went up 20, 30% over the last few years, but your income maybe has gone up 3 to 5% over the last few years, where are you going to still pay for groceries with those swipes on the credit card? Man, you look at the story and you can just see the writing on the wall, but the media doesn't want to cover just how bad things actually are out in the economy, right? New data published on Thursday by TransUnion showed the average debt per borrower hit $6,218 at the first quarter, an 8% increase from 1 year ago. As consumers manage expenses amidst stubbornly high inflation, demand for credit continues to be strong despite the currently relatively high interest rates. Tell you what, this is a dire situation, and I don't think many people are going to come out on the other side of this in a good way. In the first quarter of 2024, credit card and auto loan transition rates into serious delinquency continue to rise across all age groups. Yeah. Not only can people not afford their lifestyle, they're not able to afford their credit cards anymore. An increasing number of borrowers are missing their credit card payments, revealing a worsening financial distress among some households. Could be that consumers drain the excess savings. I know for a fact consumers have drained their excess savings. They built up during the pandemic and are still spending at all-time high levels. Like I say, I do a lot of consulting, and you can see the excess balances that happened during COVID. They're gone at this point. At 9 out of 10 institutions I see, they are at or below the balances that they were pre-COVID. So there are no more excess deposits. Let's take a look at the price of Citibank though, right? I have a Citi credit card. I think the Costco credit card is through the Citibank, right? And you can see that the price of Citicorp, has grown from around $38 a share to now we're looking at $62 a share. Wow, it's nearly doubled in the span of a few months here. And if you're looking at it from a perspective of how is the company going to be performing, right? We've seen interest rates go up, which means that they, as a company, are able to loan out their loans at higher interest rates, which means they make more money. We've seen interest rates go up, which means that the investments that the institution makes, they're going to be making more money on. And we've seen interest rates go up, meaning that overall, the banks should be doing better than they would be otherwise. And maybe that's reflective in the stock price here, right? We did get a buy signal on April 29th on Citibank, and it's definitely on its way up right now. And you can see Outlier showing a 20.54% return following these buy and sell signals, where buy and hold is down 17%. So you don't want to miss out on those. You definitely want to be taking a look at Citigroup right there with Outlier data. And you don't want to miss out on my free newsletter, right? My newsletter every single day, I will send you free buy and sell signals from our artificial intelligence data here. All you got to do is head over to freeaitrades.com and I'll send you emails like that every single day. Let's take a look at what the internet has to say about this. The US now has a record 17 trillion in household debt, 12.4 trillion in mortgages, 1.6 trillion in auto loans, near record 1.6 trillion in student loans, near record 1.1 trillion in credit card debt. Total mortgage debt is more than double the 2006 peak. Total mortgage debt is more than double the 2006 peak, and total credit card is up 50%. 50% since 2020. In Q1 2024 alone, 9% of credit card balances and 8% of auto loans transitioned into delinquency. I know that doesn't sound like much, but that is huge. That means 1 out of every 10 credit cards is behind. 1 out of every 12 of auto loans is behind. That is huge. That means as you're driving down the road, 1 out of every 12 of those cars is not able to keep up on its auto loan payments. Higher rates are taking their toll on consumers with record high debt balances. How much longer can consumers hold on? This is what I've been saying. This is my current bearish thesis on the economy right now. We are digging deeper and deeper and deeper into debt, and there will be a point where the debt wall hits us right in the face, and then the economy will start to pull back hard and fast. Hey, be sure to click one of these 2 videos up above. The YouTube algorithm gods think that these are the next videos that you need to watch to have an incredible day. And who doesn't want to have that? Click one of these to watch more, and I'll see you on the next episode.